Hello, everyone. I'm David Elízaga, CFO at eDreams ODIGEO, and I will take you through our results highlights for our first quarter fiscal 25 results presentation for the 3 months ended on the 30th of June, 2024. The key takeaway from today's results is that eDreams continues to show strong growth in Prime subscribers, and cash marginal profit margin continues to build as the maturity of Prime members increases. In fact, cash marginal profit margin was up 9 percentage points over last year, reaching a margin of 45%. In addition, we added 409,000 subscribers in the first quarter of fiscal 25 and are on target to meet our guidance for the full fiscal year. As mentioned, our profit margins have increased significantly due to the strength of the Prime model and the increasing maturity of Prime members. This has resulted in Prime Cash EBITDA growing 71% year over year. Some of the key highlights for today's presentations are: first, in the first quarter, the strength of the Prime model drove significant growth and has guided improvements in profitability. Prime members grew 32% year on year, reaching 6.2 million, with net additions at 409,000. We're on track to reach our 3.5-year-old self-imposed fiscal 25 target. I remind you, as highlighted in the past, that we do expect volatility on quarterly net adds. Cash marginal profit stood at 60 million euros, up 16% year on year, and the margin had a 3 percentage points improvement over a year as well. Cash EBITDA stood at 36 million euros, up 23% year on year, and cash EBITDA margin had a 3 percentage points improvement in 1 year. More importantly, free cash flow, excluding non-Prime working capital, grew even more, and it stood at 20 million euros versus 15 million in the first quarter of fiscal 24. This is a 5.2 million improvement year over year, which is an increase of 35%. The second highlight is that the Prime model continues to drive very strong growth. The growth in Prime more than offsets the anticipated declines in the non-Prime side of the business and results in significant improvements in profitability. Prime cash revenue margin grew by 22%, following the strong growth in members. Prime cash marginal profit grew 54%, and the margin had a 9 percentage points improvement in just 1 year. And Prime cash EBITDA grew even more as we start to leverage a more stable fixed cost base. Even with the strong top-line growth, Prime cash EBITDA grew 71%, and the margin expanded 9 percentage points as well. The third highlight is our outlook. eDreams remains on track to meet the 180 million cash EBITDA target, Prime members in excess of 7.25 million, and will do it with generation of free cash flow, excluding non-Prime working capital, of over 90 million euros. All of this growth, whilst we have faced many industry headwinds over the past 3 years. However, it is important to highlight that we expect to see better year-on-year comparatives in the second half of the fiscal year, as we increase our member base and the maturity of our Prime members increases. Year-on-year comparatives expected to be as follows. Prime members in the first half of the fiscal year are expected to grow around 28% versus September 2023, and in March 2025 by 24% versus March 2024. And cash marginal profit margins are expected to be a range of 36-37% in the first half and 42-43% in the second half, resulting in around 40% cash marginal profit margin for the group for the full year fiscal 25. Furthermore, I would like to remind you that the CNMV, that's the Spanish Stock Exchange regulator, approved on the 24th of July our voluntary and partial tender offer launched for a maximum of 4.5 million shares, representing 3.6% of eDreams issued shares at a fixed price of €6.90 per share. The timetable for the offer has been announced. The acceptance period for shareholders to tender the shares is started on the 29th of July and finishes on the 6th of September, both dates included. Concluding the highlights with a comment about the longer term, we have been building a long-term sustainable proposition, and eDO has strong fundamental growth potential beyond fiscal 25. Prime is significantly underpenetrated in the main markets and can go to new markets. In sum, Prime's proven model continues to drive very strong growth. It has delivered significant uplifts in profit margins. We believe we have the right model, the right people, and the right structure to seize and deliver on the exciting shareholder value creating opportunities ahead of us. eDO profitability was up significantly due to strong growth of Prime members in year 2+, and cash marginal profit margin reached 42%. Cash EBITDA also rose significantly, and we are well on track to meet our target of over 180 million euros in fiscal 25. As guided, the growing numbers and maturity of Prime members has resulted in a strong improvements in profitability. In the first quarter, our last 12 months Prime Cash Marginal Profit margin continued to improve. It increased to 42% from 34% in the first quarter of 24. That is an 8 percentage points improvement. Group Cash EBITDA also improved substantially. In the first quarter of fiscal 25, Cash EBITDA margin reached 19% versus 16% in the first quarter of 23. This is an improvement of 3 percentage points. Let me remind you that when looking at Prime versus non-Prime, we still think it makes more sense to look at our business on a last 12-month basis, as Prime is an annual subscription business and the non-Prime part is quite influenced by seasonality patterns. Our KPIs reported today show strong growth and significant marginal profit uplift. Cash marginal profit was up 23% over the last 12 months, as we have more members of Prime in the second or subsequent years of subscription. Also, Prime's strong growth more than offset the anticipated declines in the non-Prime side of the business. We continue to be selective on how we spend marketing, and we put more focus on Prime products versus developing products and services for the non-Prime side of the business. eDreams is fundamentally a subscription business focused on travel. Over the last 12 months, Prime has delivered 63% share of group cash revenue margin and 81% share of group cash marginal profit versus 50 and 59 a year ago. As we now have a much larger proportion of our Prime members in the second and subsequent years of membership, the level of profitability of Prime continually improves. Now we'll take you through the financial results in more detail. In the first quarter of fiscal 25, we delivered strong growth in cash EBITDA, substantial improvements in margin as the maturity of Prime members increases. In the first quarter of fiscal 25, cash revenue margin was 4% higher than in the first quarter of last year. Cash marginal profit and cash EBITDA improved 16% and 23% respectively between the first quarter of 24 and the first quarter of fiscal 25. Over the past year, our subscribers grew by 32% to 6.2 million, and our ARPU grew 1.1 euros. In a context of consumer softness in Europe, as confirmed by several travel companies recently, we have given more discounts to our Prime members as our algorithms indicate it is better for lifetime value. As a result of all of the above, ARPU is expected to be around the mid-70s for the rest of the year. While speaking about our revenues, you will notice in the breakdown by type of revenue that gradual revenue is increasing, while transaction date revenue is decreasing. There are three drivers behind this. The more important is the one already mentioned of higher Prime discounts. But additionally, we are experimenting with higher tiers of Prime that include services previously sold as ancillaries, therefore moving former transaction date revenue to gradual revenue. And lastly, it's important to note that our access to Ryanair content is intermittent. We have been dealing with the intermittent access to Ryanair content now for over 9 months, and our results already reflect this. We have the strength of our subscription model continuing to deliver on material cash EBITDA and cash flow growth. On the Prime members, it is important to emphasize that Prime renewals have remained unaffected, as eDreams and Prime continue to deliver exceptional value across nearly 700 airlines, millions of accommodations, and thousands of car rental providers. However, we acknowledge that customers solely interested in Ryanair flights are less likely to join Prime. Overall, it's fair to say that excluding this headwind, we would have materially exceeded a target of fiscal 25 Prime members. Coming back to our first quarter overall P&L, 63% and 81% of cash revenue margin and cash marginal profit in the quarter respectively are now from Prime members. Cash marginal profit margin increased to 35% for the first quarter of fiscal 25 from 31% in the first quarter of 24. That's a 3 percentage points improvement. And cash EBITDA margin in the first quarter of 25 also achieved very substantial improvements and stood at 21% versus 18% in the first quarter of fiscal 24. Cash EBITDA stood at 36 million euros in the first quarter of 25, up 23% year on year. Overall, we are well on our way to meet our self-imposed fiscal 25 targets, which, to remind you, are Prime members over 7.25 million and cash EBITDA in excess of 180 million euros. eDreams has huge potential, superior returns for shareholders and customers while transforming and revolutionizing the industry. Furthermore, we are confident in the growth and profitability outlined in our guidance and also believe the company's worth is clearly unrecognized and undervalued. I would like to conclude by highlighting the strong fundamental growth potential we have beyond fiscal 25. The longer-term potential is significant. When we announced our self-imposed targets for fiscal 25, there was no Omicron, there were no macroeconomic concerns of 22 and 23 with high inflation and significant economic uncertainty, and travel was expected to be back at pre-COVID levels much sooner. Yet through this, we have been growing very nicely in terms of Prime members, profitability, and overall profits. Underlying this is our relentless focus on building a great platform and a great customer experience. We believe we have growth far beyond fiscal 25 with a proposition and business model that is successful.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. c11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.